Money day, guys and girls. I hope you're well. Today, I'm going to show you guys how I made over 30% trading US30. Now, one of the most important things to understand when trading any instrument is that losses are a part of the game. And of course, trading, if not under the correct education or the correct understanding of how the markets work, can be very risky. So from that being said, I'm going to move into the charts. But I would like to tell you guys, if you haven't already, check out my website, litcapital.co.uk. We do have some amazing products and services available for you guys to be able to purchase. So be sure to start your career in the best side. You know the vibes, it's lit side. But taking us back to US30. Now, one of the main reasons why I trade this pair, and I call this pair my baby, simply because it pays a lot. You know, if you're able to catch a move on US30, you're going to pay the bills and a lot more. So I've really refined the pairs I've been trading. For those who are inside of my community, you'll know exactly what pairs I trade. But just really breaking down US30 and how I was able to see this move here. What I want to show you guys is whether we go down to the 4-hour, we can go down to the 4-hour time frame. What I want to show you guys is that we started to see price. We saw higher highs and higher lows, but we really started to see price failing to make a new high. And anytime price fails to make a new high, it's usually an indication of something dramatic about to happen. And if we can go back to the 6-hour time frame to the line graph, more specifically, we can see that price broke the previous low, and we failed to get a new high. So this already was giving us an indication that price was starting to do something different. The last higher low, we can see here, price closed beneath it. So what we were looking for is very simply what we call a pullback. Now, with this pullback, we of course would be using other tools. For instance, we would use what we call a Fibonacci retracement tool. So if I pull this out and I mark from here to here. Sorry guys, I couldn't see there for a sec. You can see that what I'm actually looking for is a retracement back up anywhere above the 62%. Now, more specifically, I've marked out this candle. And there's a reason why. This is what we call a lit block. And for those of you who are completely unaware to what a lit block would be, the best way to figure that out is to head over to litcapital.co.uk, head over to our YouTube channel, get involved in our community so that you can find out more. But just relating now back to this candle in this area, we was looking to take a trade anywhere above the 62%. But like I said, in between the 79 and 70%, we had a level that we wanted to buy from, specifically based on information that, of course, you can't get for free. But nonetheless, with that being said, what we're actually being able to see here is if price can push up back into that area, we are going to take the risk. Now, one of the main reasons why trading can be profitable is because if you can control how much you're losing, you can put yourself in a position where you can stand to gain more than you lose. A lot of the times people fail in trading is because they're not able to understand how risk management can help them make money. So a free nugget here, guys, is first, control how much you're losing. And if you can control how much you're losing, you can always control how much you stand to gain. In fact, you can never control how much you stand to gain. You just know that if you can control how much you're losing, then the odds are always going to be in your favor to winning more than you stand to lose. And how we trade at Lit Capital is we trade with a 3-to-1 risk to reward. So anytime I risk a pound, anytime I'm risking £1, I stand to gain £3 in return. So if I play this out here now slowly, what we're looking to see is a retracement anywhere in between if I pause it, it's happened quite quickly. We can see here, we get a retracement now right in between the 79 to 70%, the sweet spot as we call it. And we've now been triggered into our trade. Price is pushed down, which has enabled us to really move our stop loss into profit, which would now make this a risk-free trade. And of course, we're now able to allow the trade to do its thing. Doing its thing would mean allowing the trade to play out. Most of the time, a lot of people fail in trading because they get into one good trade, and based on them being inside of one good trade, they want to get inside of another. Sometimes the best thing to do is to let the trades play out. And based on what I've said, what we're seeing right now is prices playing out, working itself down to the downside. Now, if I just pause it here, one of the things I was looking for was what we call a re-entry. This just basically means me adding another short position onto this pair. And there was a few places where I would consider taking a trade. One place specifically is where this purple level is here. And again, these codes, these color coded lines that you see on my charts mean something which a lot of the people, everyone inside of the lit capital community will understand. But to tell you guys what this means is very simply, it's an important time period that we're notifying this candle from. And what we're able to see, highlighting the candle, excuse me, what we're able to see is a potential re-entry based on what price can show us around this area. And what we see, if I just clone this and drag this one up, okay, what we're able to see here is, again, if we're risking 3-to-1 risk to reward, we can see that price still plays in our favor. It gives us a bit of drawdown, a bit more than what the first entry did, but nonetheless, we're able to catch a really good trade here based on the fact that price is enabling us to catch an entry and, of course, move in the direction that we believe price was heading based on the fact that we saw the bullish structure broken. So with that being said, the next thing I would need to highlight is the target. You know, where am I going to exit the trade? And I had multiple reasons for holding this trade and wanting to see price break these lows. For those of you who look into the indices market, you will probably have seen for yourself that there's been a lot of downside potential. So really, I was looking for the liquidity to be taken out inside of these areas here. And you know what we had seen, if I just play this out, is price make lower lows, lower highs, lower lows, lower highs. So of course, we caught one entry up here. The second entry was off of this level here, and my third entry was the third lower high. So if I zoom in again, just so you guys can see, we had price make a low, lower high, lower low, lower high, and we caught another entry here based on this short position, and then the rest was history. We had price come down, and I was looking to buy out of this level down here for another reason that, again, pretty much similar to the reason why I was looking to sell. Okay, as I've said to you, these color codes that you see on my charts, they mean something, and all you need to know is they mean money. And what we was able to do was capitalize on taking shorts, pushing price down, which was how I was able to gain 15% on one trade and over 12 and over 13% on another. But more importantly, you know, taking aside making money from these short positions, you have to always put yourself in a position where once your target is reached, you need to make a decision, whether that's to take your profits or to take out half or take 80% out or close the trade entirely. There needs to be a decision process you need to go through once price has met your targets. What most people do, and the reason why trading can be risky, is because when one is in profit, they can simply just keep seeing green and think that price is going to forever keep rolling and rolling and rolling into profit. And then eventually price comes back and taps you out of the trade, halving, if not taking more than half of your profits, when you could have initially closed the trade and taken exactly what your target was when price reached that area. So we took a buy down from this area here, this level. We took a buy around the 33,100 area. And this is what trading is about, okay? Some people will say trading is about, you know, making money, which of course it is. Trading is about making money, giving you the time and freedom, all of that jazz. But the reality is, guys, controlling how much you can lose, okay? Now, in this instance, this was a shame, okay? I took this trade and it hit my stop loss. It hit my stop loss, and then it done what my worst fears would be. It went straight up into profit, right? But for this to happen, okay, puts me in a position where, one, I know that my trade wasn't a bad trade, okay? For two, I know that if price does continue to play out to how I would want it to play out, then there should potentially be another re-entry. So taking that loss, okay, so for example, I'm risking 1% per trade. I now lost 1%, okay? Despite me being up 30% on selling US30, I now lost 1%, which was manageable, okay? It was a lot better than me losing the 30% I just gained. And it put me into a position where had price have continued going lower, I could have kept a small position on one of these positions and allowed myself to recuperate the 1% I had lost from trying to take a buy here. But nonetheless, as we let price play out, we can actually see price started pushing up. And based on certain time periods in the day with US30, we understand that US30 can react more towards the New York session, which is 1 p.m. onwards. And what we was able to do here is we was able to allow price to push higher and then retest another level where we wanted to buy. And from doing so, we took a risk, this time again, risking 1%. We reduced the stop loss, and you can see here that price had tapped us into the trade here. Once price had officially, closed above this area and then pushed back down, we triggered the buy. And we can see that again, price had pushed up and given us a really good opportunity now for us to be sitting in this trade so far, risk-free, and of course in profit. Now, one of the other things I look for when I'm actually taking a trade with US30 is what we call the mothership, the S&P. The S&P 500 controls the direction of the indices market. So if you see the S&P going higher, it's a 99% chance that the US30 Wall Street market is also going to be doing the same. The Dow Jones follows the S&P. So if you can understand that, and more importantly, if you can break down the directions of where you think the S&P is going to go, that can give you a stronger indication to where you think the Dow Jones will head. So based on the information I provided you guys with today, I've broken down how I was able to make over 30% short in US30. Of course, we're selling some buys for it at the moment, or a buy, should I say. But the most important thing is making sure that you guys are controlling the amount of money you're risking. When trading high risk pairs, it's very easy to make a lot of money very quickly and to lose a lot of money even faster. So make sure you're on the right side of trading by taking your time, making your analysis, and being involved in a community of people that can help you understand how to decipher and break down charts from a price action perspective. As you can see on my charts, they're clean, they're plain, there's no indicators, there's nothing telling me when to buy, nor is there anything telling me when to sell. It's purely price action, which is what we call these candles. And of course, the joy of being able to use price action means we're not having to rely on an external factor to put us into a trade or to take us out of one. So that has been my market breakdown on US30. Thanks for watching. Be sure to like and subscribe. You know the vibes, it's a lit side.